Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, this is the special edition where we are going to be helping you understand what RBI policy has been announced. Governor Shaktikanta Das has just finished delivering his speech and we have the key highlights now. Of course, there is a status quo which is largely on expected lines. So the repo rate remains unchanged for the 8th consecutive time at 6.5%. But the big surprise that has come in is by the way of upgrading the GDP forecast for FY25, which is now being projected at 7.2% versus 7% earlier. So the RBI has given us that big surprise. Of course, on the inflation front, RBI has retained the inflation projection for FY25 unchanged at 4.5%. Let me welcome our guest on the show with us who will help us really understand what to make of the announcements that have been made. Mr. Indranil joins in, Chief Economist at Yes Bank. Warm welcome to you, sir, and thank you so much for taking the time out. First comment from you and the key takeaways for you from this policy. Are you surprised with the kind of upgrade that has come in?
Not really. In fact, our growth estimates were at 7.1% and we were actually expecting the RBI to have moved to a 7.5%, but they have stuck to a more moderate 7.2% at this point in time. On the inflation, obviously, I think we were all expecting that there is likely to be no change in the sort of expectations from the RBI, and there were obviously no expectations of a repo change. Though I have heard from the market a little bit of sort of a expectation or a slight chance that given the inflation downturn that we have been seeing, there could be some amount of dovishness that might actually creep into the RBI's policy. But what was surprising, maybe, was to a certain extent the 4:2 sort of in favor of the policy to be and the stance to be kept unchanged compared to the previous 5:1, which to a certain extent can be read as one more step forward in terms of an eventual, whenever that happens, a rate cut by the Reserve Bank of India, and therefore takes away all sort of chances of any rate increase from here on, even accepting the fact that we were not talking of a rate increase at any point in time. The policy tone for me continues to remain on the hawkish side. And I think what the RBI governor also pointed out at the end of the statement is that world over, we still are likely to see the last stage of disinflation being one of the most challenging. And this is something that the RBI would be watching out for. The other comment that I sort of would pick up from the RBI's or Shaktikanta Das's RBI governor's statement is the very fact that he emphasized that the 3.8% for the Q2 was possibly a one-off, and which necessarily means that even if you are trying to expect a rate cut around the Q2 on the basis of the Q2 inflation numbers, that could possibly be also out of the table at this point.
Okay, so those are the key takeaways right there, and you rightly pointed out, sir. Two people from the members have voted for a change in stance. Ashima Goyal and Jayantar Verma both asked for a change in stance to neutral, and both asked for a 25 basis point cut as well. Now, looking at the growth projections on the one hand, and looking at the internal members increasing in number asking for a rate cut, of course, you did point out that inflationary peg will be important to watch out for in Q2. But by when were you expecting the rate cut to happen in FY25, and will that advance now?
I don't think that there is an advancement given the fact that of course, we will have to go through now the minutes of the meeting, which comes out later in the month, very carefully to understand the mind of the four other people who have solidly stayed with no chance of a rate cut and no change in the stance at all. So that remains crucial. Dr. Ashima Goyal was anyways to a certain extent on the dovish side in even in the previous policy, even though she had voted for no change in the rates and the stance in the previous policy. Given that, I think it still remains a status quo or an extended pause for us. And as I said, the MPC minutes and the minds of these four people who still stand by no rate cut scenario and no stance change scenario, and more specifically the members, the internal members of the RBI. Because remember, even if there is a 3:3, the veto power in terms of the rate change lies with the governor of the central bank. An assessment of the inflation trajectory, sort of hearing Shaktikanta Das statement that 3.8% second quarter inflation is a one-off and it again goes up. Understanding the risks that he is looking at in terms of the southwest monsoon, he did point out to the fact that the warmer summers and a weaker downturn in the winter the prices of vegetables in the winter month could create an upside in terms of the food inflation. So those are all the factors that we would be watching out for. He also did mention the volatility in terms of the global commodity prices. Yes, the crude oil prices did come down to a 76, 77 level, but is quite solidly back at the 80 mark, and possibly likely to stick around the 80 to 85 dollars a barrel in my opinion. The metal prices globally has gone up, which necessarily means that the input cost in terms of the manufacturing for firms in India is likely to sort of also go up. And even though we are expecting huge amount of flows, I don't think there is any assessment that could say that the RBI would be allowing the currency to appreciate, which necessarily means that the benefit from inflation from the currency perspective will also be missing despite the huge amount of flows that are coming in. So an assessment of all this, I think we continue to be on an extended pause. My last point here would be that he once again very confidently indicated that while we do watch the advanced economies in terms of their rate cycle, the domestic inflation and growth trajectory is the most crucial. And with growth remaining at the 7.2% mark, and most of the commentary from the RBI in terms of the growth being on the positive side, it's very difficult to sort of see further sustained drop in the core inflation. He did mention that core inflation is one of the lowest in history, but whether you can expect a further sustained drop, especially as services sectors is booming. We all know about airline prices at this point in time. So all those factors taken into consideration, I think we may actually be on a sticky journey for inflation for some time.
Okay, sticky journey on inflation for some more time, but definitely we are ruling out a rate hike. That's what you said, sir. And a rate cut, if at all, will be dependent on how that one-off will play out on inflation. Domestic trends will be more important for the RBI to watch rather than being governed by what the global banks are really doing at that point in time. And of course, a rate cut, if at all, you're expecting by when, sir? October, you said?
Yeah, so our earliest chance we think is October, given that there is an expectation that Fed cuts around the September period. But as I did mention that a lot will depend on the progression of the southwest monsoon. Today we just have a 106% of long period average, which is definitely positive. But as we all know, the spread of the monsoon and the timeliness of the monsoon, especially in an atmosphere when water reservoir levels are at decadal lows, is something that we need to keep cognizance of, given the fact that we have had heat conditions spread across the country, and that could have led to some damage to the crops.
Okay, we'll just take a view on the markets also. Let's look at the markets. Reaction is definitely positive. Stock markets are now back above 23,000 mark as far as the Nifty is concerned. So definitely thumbs up coming in from the markets, and that largely has to probably do with that upgrade in the growth figures that the RBI has mentioned to 7.2%, 230 points higher. The Sensex is up by over 700 points as well. Mr. Pan, would you have any idea of as far as how the bond markets would take this statement, and how would they now move?
Before I was looking at the bond market, the 10-year mark was trading at around 701 pre-policy. It did go up to a 703. Now, I think a lot will depend on the type of inflows that we have. I think the rate cut scenario or the slight expectation of a dovishness and a stance change is not on the ambit at this point in time. But having sort of said that, I think there are relatively other segments of the bond market which I hear from my traders are reacting more positively to the bond index inclusion and the flows out there. We need to see some amount of critical size in this new 10-year, which I just quoted at a 702, 703 sort of a level. So it will take a little time for the new 10-year to actually come down below the 7% mark. But as we go ahead in terms of the year and as we come possibly in terms of a thought process closer to an RBI rate cut, possibly sort of looking at also if there are signals from the Fed for a rate cut and therefore the US 10-year also goes on the lower side, that's the occasion when we can look at a sustained journey below the 7%, maybe towards a 650 to a 675. But that's maybe in the second half of the financial year and more towards the third quarter.
Okay. So, towards the end of our discussion, I'll ask you as far as your own growth projections are done. You were already hoping that the RBI would probably do it at a 7.5. It was a little conservative as per you. What does that do to your own estimates for FY25 growth projections?
Nothing, because as I said that our own projections were at a 7.1%. But having said that, I think my own projections also were to a certain extent conservative, given the fact that we have had an 8.2%
Yes.
growth in the previous financial year. So I'm happy that the RBI has maintained it at a conservative 7.2% and maybe take an assessment in terms of the growth projections going forward, given that you have a southwest monsoons, which is a good one, and it does good to the rural consumption. Now, rural consumption, we have been talking about a recovery for quite some time. And there are great hopes and expectations that it would happen, but somehow it is not really sort of happening. And that's something that we need to watch out for, because the most of the, and even the RBI governor did mention that most of the uptick that we see in terms of the urban consumption is mostly due to the discretionary spend.
Okay. So in the end, just for our wider audiences, just to really just take that one takeaway, many of those are depositors, many of those are investors. What does this policy and the outlook now really mean? Since we are now discussing a rate cut possibility starting October, what should one really, as an average viewer investor, really do with their fixed deposits and with their investments? Just like an outlier, if you could just give.
Okay, now my sense is that there's one statement from the Reserve Bank of India which I can actually bring up here, whereby he said that the banks need to be careful about the gap in the deposit and the credit side. And so to a certain extent, maybe the RBI is aware of some of these risks, in the sense that the CD ratios overall at the banking level is relatively quite high, and that needs to be addressed. So there are two things that can be done. One is you immediately curtail down on your credit growth as a bank, which I don't think is a very feasible option, because banks also need to show growth. Therefore, there will be relatively a bigger struggle to an extent in terms of in the deposit rates, and therefore deposit rates can actually be sticky, or may even to a certain extent move higher, in an attempt for all banks across India to actually bring down the gap in the credit and the deposit cycles, and correct for the credit deposit ratio.
Okay, well, thank you so much, Mr. Pan, for being with us on this show and helping us with all that insight and helping our viewers understand the fine print as far as the RBI policy goes. Thank you so much. Truly appreciate your time, and we'll hope that you'll come back on the channel again very soon. With that, viewers, the initial takeaway we've shared with you as far as the RBI policy is concerned. Remember, there will be a press conference, and the media will get to ask pertinent questions to the RBI governor. We will be showcasing that on our channel as well for you to really understand what exactly is the RBI really detailing as far as after his address is concerned. And beyond that, we will also be getting you bigger panels and more detailed discussion while decoding the RBI monetary policy for you as well. So all through the day, stock markets coverage, earnings interaction, as well as we're going to be getting you something very, very special at 11:30 a.m. Remember, mutual fund investors will it will be extremely important for mutual fund investors to watch our show at 11:30 a.m. We will be getting an expert to help you really address all the concerns that are floating around on social media regarding whether the lump sum investments done by mutual fund investors on 4th of June was actually accepted by the brokers as well as the AMCs to give you the NAV of that day or the next day. So that is a big talk point on social media. We will be discussing all of that. So in case you've invested your money on the day of the elections when the markets fell down to take advantage of that drop, do watch this show that's coming up at 11:30.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and with me today is Neelkant Mishra, Chief Economist at Axis Bank.